This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Chaos and cancellations, a global computer failure halts all of Delta's flights for hours, stranding tens of thousands of passengers worldwide.
I am proposing an across-the-board income tax reduction, especially for middle-income Americans.
Taxes, trade, and regulations. Donald Trump outlines a bold economic plan he says will jumpstart America's economic growth. Rules of the road. A Chinese company best known for its search engine is focusing now on car engines, taking on some of Silicon Valley's biggest players. Those stories and more tonight on Nightly Business Report for Monday, August 8th. Good evening, everyone, and welcome. Sue Herrera is off tonight. Hundreds of flights canceled, thousands more delayed. That's not what an airline wants in the middle of the summer travel season. But that's exactly what happened today to Delta. A power outage in Atlanta, where Delta is based, triggered a worldwide computer outage, grounding flights for 6 hours. Tens of thousands of passengers were marooned. Nothing worked. There was no check-in system, no updated airport screens. Even the website was affected. Boarding passes, such as they were written, had to be written by hand, and the chaos pressured shares of the world's second largest airlines. This is just the latest in a string of challenges facing the travel industry this summer. It started back in May with those long snail-paced security lines. Now terror, Zika fears, they may be starting to take a toll. Susan Lee is at LaGuardia Airport in New York City with more on Delta's massive delays.
All Delta flights worldwide were grounded for hours after an early morning power outage in Atlanta crashed the airline's global systems. Delta says that hundreds of flights were canceled, with many more experiencing long delays.
I apologize for the challenges this has created for you with your travel experience. The Delta team is working very, very hard to restore and get these systems back as quickly as possible.
Adding to the traveler confusion, status boards weren't updated correctly owing to the system outage, some erroneously displaying that flights were either at the gate or even on time, frustrating customers.
We had no warning whatsoever that we were on their system delayed.
They had to do everything manually, and they couldn't get any of the computers to work. So, there was no checking your bag, on the street or anything. It was a hassle.
Most passengers that we spoke to say that Delta's personnel handled the situation relatively well. Delta has now issued a system-wide waiver for those being affected by Monday's travel chaos. So Delta will now refund passengers or rebook for those that have been affected by canceled flights or significantly delayed up to the 12th. For Nightly Business Reports, I'm Susan Lee at LaGuardia Airport.
Well, whether it's an airline outage, Zika, or terror fears, the problems for the travel industry do seem to keep on coming. But how much of an impact are these factors really having on the industry? Hannah Sampson is associate editor for the online travel news and information website Skift, and she joins us now to discuss. Hannah, welcome. Good to have you with us.
Thanks so much.
I am assuming, correct me if I'm wrong, that the kinds of computer glitches, outages that happened today to Delta, happened a couple of weeks ago to Southwest, they've plagued United in the past, are things that if they're not recurring, passengers forgive and forget pretty quickly.
Yeah, it usually tends to be a big headache, and maybe it's in the news for a couple of days, but people are still going to travel and not change their plans because there was a power outage that led to a lot of delays. I think it's a flash in the pan, but then people forget and go about their business pretty quickly.
If you were caught up in it, you might have a different answer to that, I suspect. If you
True.
Today were stranded, as many thousands of passengers were, you might not be so quick to forgive and forget. Let's talk more broadly about how the travel business is weathering some of the challenges that it is facing this summer. Everything from those terror worries to concern about Zika and more.
It hasn't been an easy year, and definitely it hasn't been an easy summer for the industry. I think what we're seeing and what we're hearing across the entire industry is that people are still traveling. They're being a little more cautious about how they're traveling. So maybe they're not going to some of the destinations that have been targeted by terror attacks, or maybe they're not going to places that have rapidly spreading Zika.
Where is that being felt? Are we getting documentation, for example, that travel is off a little bit to France, to Belgium, to Turkey, and maybe there are other places, including the national parks of the U.S., that are picking up some of those travelers?
That's certainly, I mean, no one wants to benefit from someone else's misfortune, and a lot of destinations are making clear to say that. But when France and when Belgium and Turkey, for example, are feeling the pinch because people are concerned about their safety going there, then other destinations in Norway or the UK, or especially domestically here in the U.S., are feeling a lot more optimistic because they think they're a better option.
Has the British Brexit vote affected travel either to Britain or from Britain into the U.S.? British travelers, they're big travelers and they come to the United States. Has that affected their predilection to travel, or has the strong dollar discouraged from Europeans from coming here?
There's a whole mixed bag of factors right now. So right after the Brexit vote, which I think surprised a lot of people, you could hear a lot of Americans saying, well, let's go ahead and take that summer trip to London right now. And at the same time, U.S. companies are concerned about the impact that they're going to see from Brits coming to the U.S. It's still kind of up in the air how that's going to turn out, but I think that there are a lot of destinations here in the U.S. trying to cater more to domestic travelers because they fear that fall off from the UK and from Europe broadly.
All right. Hannah, thank you so much. Hannah Sampson with Skift tonight. We appreciate it. Well, on Wall Street, stocks eased back from record highs set last week. The declines led by healthcare names and came despite a rise in oil prices and a big rally in energy shares. The Dow Jones Industrial Average fell 14 points to 18,529. NASDAQ dropped nearly 8, and the S&P 500 off about 2. As for oil, there are reports that OPEC is planning informal talks for September, and that raised hopes for an output freeze or cut even. And that sent the price of domestic crude up nearly 3% on the day. Well, Donald Trump today vowed to make America's economy great again. Speaking at the Detroit Economic Club, the Republican presidential nominee said he would cut taxes, revamp trade agreements, and he proposed a moratorium on new regulations. John Harwood is on the beat for us from the Motor City. Hi, John.
Hi, Tyler. You know, Donald Trump tried to jumpstart his campaign, which has been struggling of late, with that economic speech here in Detroit. In addition to his familiar regimen of tax cuts, he added a new proposal that his daughter Ivanka had signaled in her speech at the recent Republican convention.
No one will gain more from these proposals than low and middle income Americans. My plan will also help reduce the cost of childcare by allowing parents to fully deduct the average cost of childcare spending from their taxes.
Now, in addition to that new child care proposal, he reiterated the desire to renegotiate trade deals like NAFTA, pull out of the Trans-Pacific Partnership, also roll back regulations, including Obamacare and Dodd-Frank. As for those tax cuts, he did change those proposals slightly. Last September, he had rolled out a plan that had 3 rates, 10, 20, and 25% as the top rate. He had new rates today. Take a listen.
We will work with House Republicans on this plan using the same brackets they have proposed, 12%, 25%, and 33%. These reforms will offer the biggest tax revolution since the Reagan tax reform, which unleashed years of continued economic growth and job creation.
Now, that new tax proposal accomplished 2 things. One, it aligned him more closely with Paul Ryan, the Speaker, and House Republicans. It also reduces the deficit impact of his tax plan, which had initially been estimated at $10 trillion added to the deficit over 10 years. Don't have a new estimate yet, but his aides say one will be coming in a new tax speech in coming weeks, guys.
All right, there's a new deductibility of child care expenses is one thing. Lowering the business tax rate to 15% is another. It'd be interesting to see what the effect on deficit will be. Do we know any, I don't want to get too much into the weeds, John, here, because we may not even know how that deduction for child care expenses would work. And of course, most people who have write-offs on their taxes are wealthier and don't use the standard deduction.
Right. So we don't know, Tyler, first of all, whether it's refundable so that people without income tax liability would be able to benefit from it. If not, that means the benefits would skew toward the upper end of the income scale. And we also don't know whether or not this is something that will exist on every tax form, irrespective of whether you itemize or take the standard deduction. A lot of unanswered questions. And again, in the case of the child care plan, they say they'll be rolling out more of those details in coming weeks.
I was struck by two things today, John. He stuck to his script very religiously. It was a sort of un-Trump Trump today. And in the face of multiple hecklers, he kept his cool.
He was very disciplined, and I'm sure that pleased Republicans in his campaign and beyond his campaign. He was still Trump, though. At one point, he said something that was flat out false about Hillary Clinton's economic proposals. He quoted her as having said last week, "We're going to raise taxes on middle-income families." In fact, she said, "We aren't going to raise taxes on middle-income families."
All right, John Harwood in Detroit for us tonight. Thanks very much. Well, both Trump and Clinton have proposed spending a lot more money on infrastructure as a way to grow the economy. Today, New York Times op-ed columnist Paul Krugman wrote about needing increased public investments in everything from energy to transportation. And according to the Wall Street Journal, Wall Street is urging local and federal governments to invest in big-ticket projects now while interest rates are so low. Joining us to discuss this is the writer of the Wall Street Journal article, David Harrison. David, welcome. Your piece this morning was very interesting because while people are talking about infrastructure projects, people are urging state and local governments to borrow, they're not doing it. What's the number? What do the numbers say and why?
Yeah, right. So the state and local governments were really, really hard hit during the recession, and they had to make some really drastic budget cuts that were really painful. Now that things are slowly getting better, they're still a little skittish about borrowing a lot of money. So borrowing by state and local governments, the issuance of municipal bonds, is off somewhat from the pre-recession pace. I think they're now at around, they're borrowing at around maybe just a little shy of $150 billion a year, which is quite a bit lower than it was before. So there's still some anxiety and some nervousness on the part of these governments for issuing new bonds and borrowing a lot of money.
I guess it's not just the governments that are a little bit gun shy, it's the voters, because in many states, including the one I live in, many of, not all of those bond issues have to be approved at the polls.
That's right. Yes, that's definitely a concern for a lot of in a lot of states. You're right. A lot of places do have referendums that voters have to approve new bond issuances. So you have the situation right now that's kind of strange, where one of the main sort of drivers of new borrowing isn't so much the interest rates, but it's the popular mood. And right now, the popular mood is definitely very much sort of anti-tax, anti-borrowing. And that's holding back a lot of bonds.
You know far better than I, David, whether states are in better fiscal shape and could take on additional borrowing. Tell me about that. And certainly the interest rates are as favorable as I've ever seen them, and I've been around a long time.
Yeah, that's right. So on the fiscal picture, it is improving somewhat, but it hasn't really improved very, very much. It's been really slow to come back. That's largely due to the fact that incomes haven't really come back very much. So states are in a better fiscal situation, but it's not great just yet. So it's harder. And then on the yields perspective, they're really, really low because of a number of factors. Because the Federal Reserve has kept rates very low, and also because investors are looking for safe investments, and municipal bonds are one of the safest.
All right. Thanks very much, David. We appreciate it. David Harrison of the Wall Street Journal. Well, there's one major question that is hanging over the economy, and it has some economists puzzled. How can growth be so weak at the same time the labor market is so strong? Steve Leisman takes a look at this latest economic puzzle.
When it comes to the economy these days, we have a split decision. In one corner, weak growth. In the other, strong jobs, and investors, economists, and the Fed struggling to figure out which will be the winner. At 255,000 jobs in the month of July, job growth weighs in well above average. At just 1%, though, economic growth is a full-fledged weakling, a whole point below average. Economists, though, are betting on jobs.
The question is, what can we measure better, the number of people working or the entire U.S. economy on a quarterly basis? I think that your money's got to be on the labor market being the right signal.
One way to deal with the split is to call a tie.
So the GDP was 1. The employment number probably suggests something like 3. The truth's in the middle. We're growing 2.
What's it mean for stocks? More jobs and less growth suggests companies might be less profitable, but consumers richer. And that could be okay for equities.
That's not going to give us double-digit stock market, but it can give us, 4 to 6%, couple points for dividends, 6 to 8 over the next 5 years or so. That'd be fine.
What does it mean for the Fed? If the reason for the split decision is one of the data points is wrong, it could mean a policy mistake. The Fed might stay too low while inflation and the economy heat up. But the Fed is more worried about weak growth than strong jobs.
They're going to be a little confused, and confusion breeds caution. And I think we've already seen that, and UBS expects we're going to continue to see it. So we're expecting the first rate hike in December.
By then, the Fed should have a better idea if strong jobs knock out weaker growth. For Nightly Business Report, I'm Steve Leisman.
Still ahead, still not sure which way the economy is headed. We look to the transportation sector, trucks and trains mostly, for some clues. A number of smaller mergers were announced today. Walmart made official the acquisition we told you about last week. The world's largest retailer will buy the e-commerce startup Jet.com. The all-cash deal valued at $3 billion and helps Walmart better compete online. Digital sales still just a fraction of Walmart's overall business. Shares of Walmart fell fractionally today, as you see there. The South African company Steinhoff will pay about $2.5 billion to the owner of Sleepy's company owner Mattress Firm. This is Steinhoff's first move into the U.S. market. The deal will create the world's largest multi-brand mattress retail distribution company. Shares of Mattress Firm, well, they were firm today, up 114% to $63.75. Vail Resorts will buy the Canadian resort Whistler Blackcomb for a little more than $1 billion. The acquisition further diversifies Vail's locations and will expand its season pass program. The transaction expected to close in the fall of this year. Shares of Vail up about 8% on the session. And TIAA confirms it has reached a deal to buy Everbank Financial for $2.5 billion in cash. The takeover designed to bolster the firm's banking business and comes about 2 weeks after Everbank said it was in talks for a buyout. Shares of Everbank up about 3% in trade today. Well, transportation is one of the most closely watched industries, and that is because it's viewed as a proxy for the health of the economy. When more goods are moved via rail or truck, that means, in theory, that there's more economic activity. For a while, the stocks that make up the sector have not been performing as well as the broader market, but that looks like it's starting to change. Morgan Brennan has tonight's Sector Spotlight.
The Dow transports have finally begun moving higher, outperforming the broader stock market since the start of July. It's a big difference from earlier this year when the transportation average was trading down almost 30% from its late 2014 high, as Wall Street feared another recession. The reversal is important because transports have long been seen as a barometer of economic health. So what are transports signaling now?
The demand is okay, but not great. It's just coming off of a fairly weak base, and so I think it's probably still a relatively muted economic environment that we're in right now. We would love to see a little bit better activity to kind of give us a little bit more conviction in the economy getting better.
Case in point, truckers. Trucking is a leading economic indicator, since 70% of all goods in the U.S. move at some point by this mode of transport. The American Trucking Association's report tonnage has tumbled this year amid weak shipments and too many trucks on the road. But recently, there's been a slight uptick in demand. That's helped stocks like Knight Transportation, Swift Transportation, Werner Enterprises, and a small but closely watched company called Covenant Transportation jump this quarter. But then there's the railroads. After being battered by the collapse in commodity prices, shares of Union Pacific, CSX, Norfolk Southern, and Kansas City Southern have chugged higher this quarter, despite tepid earnings. Why? Experts believe U.S. rail volumes, after free-falling for more than a year, may finally be bottoming out.
We've seen a pickup in freight activity in the months of June and July, and we've seen that on the rail side with an improvement in some of the bulk commodities like coal and grain. That's picked up from the troughs earlier in the second quarter. We've also seen it on the truck side a little bit, and I think it's probably partly due to, more seasonality in the weather. We've gotten a hotter summer start, and I think that's starting to move volume through.
Investors view railroads and other hard-hit transport stocks as potential value plays, since they're trading at lower multiples relative to other industrial companies, a reversal from just 2 years ago. But while the worst may potentially be over for this sector, freight volumes have a long road ahead to return to their 2014 highs. And key factors, including inventory levels, energy prices, and the strength of the dollar, could still derail a recovery, at least where this sector's concerned. For Nightly Business Report, I'm Morgan Brennan.
Profit rises at Sotheby's and tops expectations, and that is where we begin tonight's market focus. The auction house said cost cuts and higher commission margins lifted earnings. Lower inventory sales did drag down revenue, but even so, those results were still good enough to top estimates. Shares rose 13% on the day to $36.49, biggest one-day gain there in more than 4 years. Lower milk prices helped to drive profit higher at the dairy producer Dean Foods. However, those results came in on the skim side, a little light. Missed estimates. The company also said revenue for the quarter fell because of an overall drop in volume. Shares down 3.5% to $18.16. Strong product demand and lower prices for animal feed helped Tyson Foods top profit expectations. Revenue at the meat processor did fall, but it was still good enough to surpass street targets. The company also raised its full-year earnings guidance. Shares finished the day up fractionally, $74.07 the close. Robust sales of the drug Botox drove revenue higher at Allergan, but those results still missed street expectations. The biotech company saw its loss widen, but still managed to top earnings estimates by a penny. In addition, Allergan cut its revenue forecast for the year and said it does not plan to enter into any merger talks. Shares for the day down 2% at $248.31. News Corp posted an uptick in sales in the latest quarter, thanks in part to strong performance in the company's digital real estate segment. However, those results were shy of street targets. The owner of the Wall Street Journal said it has regained profitability, but earnings for the quarter also missed estimates. Shares were flat in after-hours trading, as you see there, after finishing the regular session up a tick at $12.84. Coming up, hitting the road, the Chinese company that is competing against some powerful Silicon Valley firms to change driving as we know it. The man who was instrumental in building Google's self-driving car business is leaving. Chief Technician Chris Urmson joined Google back in 2009 to join what was then a secret project. The decision comes about a year after Google hired a former Hyundai executive to run its car unit. According to reports, 2 other top executives have left the project as well. Well, Google is not the only company with big plans for a self-driving car. Far from it. The Chinese company Baidu is also trying to compete, and it is hiring a lot of people from Silicon Valley to help in its effort. Eunice Yoon reports from Beijing.
Chinese internet giant Baidu is moving fast to create a self-driving car. Considered the Google of China, Baidu is known more for its search engine rather than its car engines, yet Baidu is betting that, like its American counterpart, it can develop the automobile of the future.
Down the road, in the future, the car will be what we call smart car. And in a smart car, the value of software will be much more important than the body and the hardware.
Till now, Chinese companies have lagged behind their foreign rivals in the auto industry. But new internet and electric technologies promise to reset the starting line, and Chinese firms are hoping to get an edge. Baidu isn't interested in making the actual car just the brains.
I think Baidu really built up the strength in the AI technologies. We have been very innovative in this area.
The company has hired hundreds of people in Silicon Valley to focus on AI, or artificial intelligence, and is now among the top tech firms applying deep learning, where computers learn by themselves. It's also tailoring its in-car systems so the country's tech-savvy drivers can connect with their smartphones. Baidu Maps has more than 70% of the Chinese market.
Here are our applications. You can use them to make phone calls, browse maps, to navigate, and use voice recognition because it's hard to type while driving.
Do you think that this app could be popular outside of China as well?
This year, the Baidu Map app will be available in more than 190 countries. When the map becomes more popular overseas, we'll consider bringing the car system abroad as well.
Baidu, together with various automakers, is aiming to sell a completely driverless car on a mass scale in 5 years.
We believe that we can build the best self-driving car in the world.
Why is it important for you to be first?
Because whoever bring more self-driving car on the road, you can collect more data. As just said, the more data, the system will be smarter.
Potentially helping Baidu to surpass its rivals on the road. For Nightly Business Report, I'm Eunice Yoon.
And that is Nightly Business Report for tonight. I'm Tyler Mathisen. Thanks so much for watching. Have a great evening, everyone, and we'll hope to see you back here tomorrow night.